Brad Richards is with me. He's the CEO of Goldshore.
I am.
You will introduce yourself, I think, much better than me. And yeah, please start.
Thanks, Tarek. Yeah, and thanks. Huge crowd. I don't know if we can fit anybody else in here, but maybe they'll just stand in the back. But thanks for taking the time to hear the story. You know, it's funny. I like this conference because it's my first time here, but it's also small enough to be intimate, and the quality of people who are here, I think, is tremendous. It speaks well to Kai and the people that he's associated with. We all have to do this. These are forward-looking statements that we talk about, and I refer to everyone to our website on our forward-looking statements. You can find them and you can read and review them for yourself. I always like to talk about the people and the people who are behind companies, the people who create these visions and create and execute on actually the mission and the vision of the company. And I've been in this business a long time, 35 years. I've run a number of listed companies, and I was with Kinross in the early days and formed a company with the CEO of Kinross called Katanga Mining. We took the company from $25 million to $2 billion, an exit to Glencore. We made our shareholders 100 times money. And after that, I went on to run companies such as Rox Gold and Avocet, and for the past 10 years, I've been working exclusively for private equity. Pete Flindell is our VP of Exploration. He has been with me for 20 years and been on my last 10 projects, mostly in Africa. And we put together a board of directors who I think are really complementary to what I do and what I see for this company. We've got a bunch of guys with gray hair like me. We've got a bunch of guys with no hair like Doug, and a lot of people here know Doug. And we've got a bunch of young kids who are CEOs in their own right. Everybody on this platform here are all CEOs of various resource companies, and as is Victor. And we have 2 Wesdome appointees. So I'll talk about the project a bit in a second. One of the key things and how I came to this project was David Garofalo and I have been friends for a long time, and he asked me if I would be interested in doing something. I lived in London. I'd been working in Africa for about 15 years, and David came to me and said, "Brad, this is something that's right up your wheelhouse. We're gonna collectively put together an all-star team of people, both not only on your board but also as an advisory board. We've got a lot of reach here, and I know your experience in London and in Canada, along with all of ours, is going to reach a number of investors. And not only is this about reaching investors, but it's about the quality of this project." So David and I went and talked to Wesdome. Wesdome were selling a business that they had called the Moss Lake Project, and Moss Lake is a historical 4 million ounce gold resource on one of the largest land packages in Ontario. And we acquired the project from them for $52 million in cash and shares, 12.5 in cash, and 30 million shares from the start, and an additional 20 million shares are owed over the next 4 years upon a number of milestones. The project is in one of the lowest risk jurisdictions, I think, in the world. I've worked the last 10 years in places like Burkina Faso, Guinea, Sierra Leone, and most recently the Congo, DRC. Ontario was a bit of a refreshing place to come back to, and I'm from there, which made it even easier. As I said, we've got one of the largest land packages in the mining sector in northwestern Ontario. But not only do we have 4 million ounces, we have a known 20-kilometer mineralized trend. And somebody stopped me there this morning and said, "Well, why did Wesdome sell this then?" And I said, the answer is very simple. Wesdome have 2 of the highest grade underground gold mines in the world, Eagle River and Kena. And this is completely the opposite of that. This is low grade, open pit, bulk tonnage, and it really doesn't fit with them strategically. But they wanted to bring those ounces into their portfolio 10 years ago so they could get a re-rating on those ounces from $5 to $85, and they did. Now they want exposure to the gold price, and they want exposure to the product, to the project. So again, we saw this as an opportunity. We put together a very early 100,000 meter drill program, And I'll share with you later on the economics of the project that were created in 2013 when the resource came out and updated last year by Wesdome. This is where we are, just northwest of the Great Lakes in a little area called Thunder Bay. We're about 100 kilometers away from a city of 150,000 people. We are on the Trans-Canada Highway, 1 kilometer off it. Anybody knows Toronto and knows Yonge Street? We're on Yonge Street. And Highway 11 goes 1,800 kilometers from Toronto all the way to Thunder Bay, and we're right there. But the takeaway is, we're in this Red Lake, Abitibi, and Timmins Camp area. There are a lot of deposits very similar to us. And if you look back 12 years, Detour was right where we are today. They had 4 million ounces, about a gram 2, gram 1. They had a big land package, and they expanded that to 15 million ounces at a time that they transacted to Kirkland Lake for $3.6 billion. They went on to expand the resource to 30 million ounces based on their land package. But this is very similar to Cote Lake. It's very similar to Rainy River. 1 gram deposit, bulk tonnage, and these are leveraged plays to the gold price. A lot of history at Moss Lake, a lot of starting and stopping just because of the copper price and the gold price, and I just introduced a new word, copper. There was a copper gold mine on one of our targets on our property back in the 80s that was run by Noranda and completed by Xstrata, and they shut it down because copper price went under $1. This is our resource statement. We have about 1.5 million ounces in indicated and about 2.5 in inferred. Our job is to add to this, both increase the quantity, but also increase the quality. Because what I'm trying to do at the end of the day through our 100,000 meter program, if not show a tier 1 asset in Ontario, if not show a tier 1 asset, at least show the path to it being a tier 1 asset and upside beyond that. Again, I want to be very clear. Our job here, my job here, and what we've all agreed to kind of as an advisory group and a board, we're going to try and create as much value as we can in as short a period of time as possible, and then look to give our shareholders and our investors an off-ramp, give them a liquidity event. There's no way in the world that the market is going to allow me to build this mine, but I want to show a path to construction. I want to show a path to 10, 20, beyond million ounces, and that'll be attractive to the Barricks of the world. It'll be attractive to the Newmonts of the world. I was in Denver, and I listened to Ronnie's presentation earlier yesterday, and it was hilarious because that guy walking across the floor at the Denver Gold Show, I saw him, and quite frankly, I was at the door watching all of that happen. I go, why am I here? Nobody wanted gold throughout the summer. Nobody wanted gold equities through the summer, and apparently nobody showed up for Denver. But it's a different story today, and I don't have to go through the macroeconomic kind of overview of why gold. There's many things to attribute to it, whether it's the macroeconomic look, it's the printing, it's all the things that Ronnie went through in his presentation. But it feels like, we've seen tech bubbles, we've seen real estate bubbles, we've seen lots of bubbles. What it feels like today is an everything bubble. It feels like everything is on fire and it's not sustainable. And that's creating this environment for gold that I think is a tremendous opportunity for gold companies like us that are geared and levered to the gold price. This is our land package. We have toe to toe, we have 40 kilometers, but we have a known mineralized trend at Moss Lake of over 20 kilometers. At the polar opposites down at Hamlin Lake, we have a copper gold expression on an IOCG deposit. And up in the northeast, we have copper gold where the historic copper mine was at North Coldstream. We have copper expression up there. And what you're going to see in the first kind of 50, 60,000 meters of our drill program is more of the same. You're going to see 1 to 2 grams over 200 meters, 150 meters, 170 meters. You're not going to see 50, 60 grams at 10 meters. You're not going to see 10 grams at 1 meter. You're going to see 1 gram at over big distances. Again, very different for Iris. These VMS deposits are copper bearing with big gold vein systems through them. But there's been a lot of historical drilling. There's been 150,000 meters drilled already on this property. And our job is to make Moss Lake a tier 1 project. But also, if we can get our targets tested up in the northeast and the southwest, we may have a copper spin out that we can spin out of this company somewhere down the road. And for me, that's quite exciting. I've got a both gold and copper background, and I think what we see so far is the workings of a really nice option play for Goldshore shareholders. One of the things that attracted me to the project was it's very under-drilled. It's only drilled down to 280 meters, and we're going to laterally extend that, which will allow us to go much deeper than 280 meters, more like 500 meters, possibly deeper. Detour's life of mine plans 850 meters depth. So we have a lot of scale to go wider, longer, and also deeper. I'm going to peel through a couple of steps here. I'm cognizant of time, but we are doing extensive metallurgical testing simply because I think it de-risks the project. But for us, it'll also increase recoveries, putting 10% at least onto the economics. We've completed a massive VTEM survey over the entire property. What it did was validate all of our theories. The theories are this formation is up against a banded iron formation, and you can see the extent of the mag lows in the blue and green in the northeast, and also in the blues in southwest, where we have mineralization. We know it's mineralized. Didn't make the resource because of spacing. Our job is to infill and bring it into the resource. But the two copper expressions in the polar extremes of our property are also significantly interesting, and we need to get through it. Again, first hole we ran, mineralized down to 700 meters, exactly as we thought. And you can see the existing resource there, simply under-drilled over the past 30 years. We built our own infrastructure to handle 4 rigs a day. We're going to be ramping up to 4 rigs by the end of November, and that will get us through our program by September of next year. And then we've also illustrated a program beyond that. But I think this time next year, we're going to be in a position to update the resource statement based on the 100,000 meters of drilling. Beyond that, I'm going to do a PEA update to what we've done. And this is the original PEA. The economics are quite stellar. We've got 3 million of input at 80 to 85% recovery, 2.5 million ounces out, 10-year mine life, and 350 to 400,000 ounce peak production. This is the framework for a Tier 1 asset. What we're going to do is prove it up. And you've heard all the majors talk about Tier 1 assets in Tier 1 jurisdictions. We just saw the deal with Newcrest and Pretium. We just saw the deal with Agnico and Kirkland. There's going to be more of that in the next 12 to 24 months. This project has a very compelling start. The NPV of this project's $1 billion at $1,700 gold, and it's pre-tax, and it's $600 million post-tax. So companies like ours, this stage of development, trade at about 0.3 times NPV. That's $180 million to $300 million market cap. We're trading at $65 million today. Why? Because we just listed in June. We went through the summer doldrums. Everybody went away on holiday. Nobody wanted to talk about gold. Gold equities got pounded. And we wake up in September, go to the Denver Gold Show, nothing there. And now we're starting to feel the momentum of the gold market due to inflation. And now we're starting to see kind of all the gold equities start to move. The second real valuation metric I like to use is on a per ounce comparison to a relatively similar peer group. These are all projects in Ontario, Quebec, and the US, put together by the bank with all low grade, open pit operation potential, and all with a minimum 2 million ounce resource. And on a per ounce basis, we're not in the bottom quartile, we're at the bottom of the pack. We trade at $14 an ounce, whereas the mean is $45 or $50 an ounce. And these are for projects that, personally, some of them I think are less robust or much less robust than ours. And I would see we should be a first quartile project here, which provides for significant upside to our shareholders. The last valuation metric I like to use is transaction comps. And Cote Lake transacted for $700 million with 10 million ounces. Our goal is to put 10 million ounces on our resource statement. And if we can't do that, we'll get close to it and we'll show a path to 10 and beyond 10. But our goal with 100,000 meters is to hit 10 million ounces. And that for us is a 10-bagger on our existing share price. Very tight cap structure. We have 20 million bucks in the bank. We only have 33 million shares outstanding. I raised $10 million last week, which is on this, and we have 116 million out. Westdome, all of Goldshore shareholders are all locked up for 3 years, and those shares are released every 6 months. 15% of those shares are released every 6 months. But the free float that we see today are all of the hard dollar we raised back in February that were released in June when we listed. So again, I'm going to wrap up real quickly here. I think that we tick a lot of boxes. And now when you're looking for gold equity opportunities, you're looking for leverage. In a $1,700, and you saw the economics, at $1,700, this is $1 billion NPV. What's it going to be at $2,200? What's it going to be at $2,300? Because I think gold's going to trade $1,800 to $2,200 for the foreseeable future. You've heard arguments that it'll go to $3,000. You've heard even bigger arguments than that. This project goes up $200 million in NPV. The project we start with, not the project we're going to have a year from now, goes up $200 million in NPV every $100 increase in the gold price. We're in Ontario. We have a management team I think is pretty robust that a lot of people know, and we have a land package that we can gear up as well. To as we've only drilled 8% of our total 26,000 hectares. So I think we tick a lot of boxes for investors. We tick a lot of boxes for this space and in this environment. So thanks for listening for now, and thank you.
Thank you.
Sorry it was so fast.